This is task 6 from the first sample assessment for business tax. So task 6 is about calculating taxable profits and corporation tax payable. So we've got a number of parts to this task. Let's have a look at the requirement for part A first. We'll be provided with quite a bit of information here, and we don't want to read that right away because we wouldn't know why we're reading it. So if we look at the requirements first, then we know what purpose we have for reading. So we need to calculate the taxable total profit and corporation tax liability of Company K for the year ended 31st March 2025 by completing the table below. So any amounts decreasing taxable profit should be shown with a negative figure using a minus sign. And remember, a computer is marking your answer, so you need to make sure you write your answer in the correct format or the computer won't recognize it. So they've given us a table there. So we've got our trading profits after capital allowances, investment income, chargeable gain, qualifying charitable donations, taxable total profit, and then we need to work out the tax liability. Now, what typically happens in these questions is that the order in which the answer appears will not match the order in which the information appears. So there's a risk that you waste quite a bit of time looking for the information that you need. So we'd recommend that you work your way through the question line by line, putting the number into the appropriate box in the table. We would not recommend that you work through the answer line by line because that can be quite time consuming looking for all the information. Because you can see in the answer there are fewer words to look for, whereas in the question there are lots of words to try and search. So let's show you how this works then. So in the year ended 31st March 2025, Company K had a taxable trading profit before capital allowances of 248,795. So that's what we want to do then in our first box. There's our trading profits. So we have 248,795. So we've dealt with that first number. Okay. Now I know this is before capital allowances, whereas we want after capital allowances. So I'm going to need to adjust this, but I don't want to do it now. I don't want to waste time searching for where the capital allowances are in the question. Okay, so I'll make the adjustment later when I find the information that I need. Then in May 2024, Company K sold an asset for 160,000, resulting in a chargeable gain of 47,000. So remember that companies just include their gains with their trading profits to form part of their overall corporation tax. So yeah, we've got a line for chargeable gain. We can see that there, so I can put the 47,000 straight in there. Again, we may need to adjust it when we get more information in a moment, but we don't know. We're also told the money from this sale remained in the company's bank account for the rest of the year, earning interest of £1,108. Well, that's investment income, so let's put that number in. Again, notice here that the information in the question is not in the same order as the answer. And then Company K donated 4,000 to charity. Okay, so we can see that we've got at the bottom of the screen, it shows us that there's total profits of 296,000. So yes, we will be able to use that donation relief and we can deduct 4,000 from here. If we didn't have any profits, then we wouldn't be able to take advantage of those donations. But as we do have some profit, we can deduct the donations from that. Okay, so we dealt with the 4,000, and then the next bit of information, capital allowances for the year ended 31st of March have been calculated as 17,200. So what we want to do then is deduct that from our trading profits. So if we take the 248,795, take away 17,200, so that gives us a new figure here. So we want 231,595. So that means our taxable total profit, 275,703. And I've gone through all the text to make sure we've covered all of those numbers. Now we're also told that Company K has no associated company. Now what's the significance of associated companies? We may need that to calculate any marginal relief. but let's see whether we need to do that anyway. So we need to work out the corporation tax liability. So what tax rate are we going to use here? So here are the reference materials, and we're looking at section 4, and we can see that we have two different tax rates. There's 25%, but if we're a small profit making company, then it's only 19%. So there's a bit of a mixture here, and the threshold for whether or not we apply any marginal relief is if we have that 250,000. Now in our question we can see that our taxable total profit is more than 250,000, so we don't need to apply marginal relief. We can simply apply the 25% rate. So if we take the profits of 275,703 and we multiply by 25%, we get corporation tax of 68,926. So remember, we can just apply mathematical rounding in our AAT assessments. Okay, moving on then to part B, identify which one of the following statements is true, and these are all about long periods of account. So the first one then, if a company has a long period of account, trading profits after capital allowances are time apportioned into two separate periods. So let's just remind ourselves then what's going on with these long periods of account. So if a period of account exceeds 12 months, the period is split into two accounting periods, and each accounting period will give rise to a separate corporation tax liability. So if we've got this long period, what we're going to do is divide it into two periods. The first of them will be 12 months. And then the second accounting period will be the rest. Okay. Now we will have profits, we will have a variety of gains, so we need to work out then how are we going to split all those different types of income and gains between the two periods. So trading income before capital allowances is just time apportioned. Property income is time apportioned. Chargeable gains are going to be put into the period when the disposal happened. Donations, yeah, we saw that those qualifying donations in part A, didn't we? Those donations are put into the period when the donation payment was made. But what about capital allowances? Well, for capital allowances, we need to compute those separately for each of the two separate accounting periods. So in this first statement, it says that capital allowances are time apportioned into two separate periods. Well, no, that's not true. Okay, so we would time apportion the trading profits, but we would work out capital allowances for the first 12 months and then work out capital allowances for the smaller period separately. Okay, what about the second statement? So provided an accounting period is not more than 18 months long, a company can treat it as a single period for tax purposes. Well, no, that's not right. Yeah, if the period of account is more than 12 months, we must separate it into 12 months and then the rest. Right, the third statement, if a company has a long accounting period, it will split this into a short tax period followed by a 12-month period. Now, no, that's not right either. The first period must be 12 months, and then the second period is the shorter one. Okay, so we've dismissed the first three, so the fourth one must be right. But anyway, let's just verify. If a company has a long period of account, qualifying charitable donations are allocated the periods based on the date of payment. Well, yes, that's correct. Okay, so chargeable gains and qualifying donations are allocated the period based on when they actually happen. Okay, let's move on to part C. Company M has taxable total profits of 120,000 for the year ended 31st of March 2025. Company N has one associated company, and we need to calculate the corporation tax payable for that period. So we've got that 120,000, and we can see that this is below the upper limit of 250,000, and that means we need to apply marginal small company relief. So how are we going to do that? Well, first of all, let's work out the tax based on the 25%. So we'd have our 120,000 profits multiplied by the 25%. So that gives us corporation tax of 30,000. So that's our starting position. And then we need to work out our marginal relief, and they've given us the formula for doing that. So our marginal relief, we're going to take our upper limit, which is the 250,000. But remember that we have an associated company. So what we need to do is effectively share that between the two companies. So we've got the 250,000 upper limit shared between us and the associated company, so that gives us 125,000. We then deduct our taxable total profits, which are the 120,000, and then we multiply by 3/200ths. Okay, and that's simply the number they've given us in the reference materials. So when we multiply that all out, that gives us marginal relief of £75. So when we deduct that from the 30,000, it means we have a corporation tax payable of 29,925. So the thing you need to look out for here is the issue with the associated companies, because the reference materials don't really clarify what exactly you need to do. It tells us that the upper limit is reduced if there are associated companies, but the reference materials don't say exactly how to do that. So we just take the upper limit and we divide by the number of associated companies plus us. Okay, so there's us and one associated company, so we divide by 2. Okay, so that's the bit that you need to look out for. So our answer then is we have 29,925. And then finally, for part D, company N has taxable total profits of 140,000 for the 6-month period ended the 31st of December 2024. It has no associated company. So using the reference materials, we can see that their profits of 140,000 are less than the upper limit, so we might need to apply some marginal relief. But again, remember that our upper limit is reduced if the accounting period is less than 12 months. So they've only got a 6-month period now. So what we need to do is multiply the upper limit by 6 months, and that gives us 125,000. So while their profits of 140,000 was less than 250,000, it's actually greater than the time apportioned upper limit. And therefore the full 25% applies. There is no marginal relief for this company. So we take our 140,000 and multiply by 25%, and that gives us corporation tax of 35,000.